Okay. So why is this balance of trade seen as a balance of payments, right? Well, it's not necessarily the balance of trade, but it's it's derived from the balance of trade, right? When we talk about a current account deficit, the flip side of having a current account deficit means that whatever that country is, so our country, the United States, is a net borrower from abroad. Conversely, a positive would mean that they are net lenders. Positive current account balance means that they are net lenders, like the People's Republic of China. It's important to keep in mind that this inflow and outflow of foreign capital, it contains the debt that governments owe other governments, right? So, the Chinese government has a whole bunch of U.S. Treasury bills, right? So technically, the United States owes China a whole bunch of money. This inflow and outflow of foreign capital does contain that, but there's other situations going on. There's actually a really relevant and great podcast that I will send out as an announcement to everybody, which is talking about the current situation in the Central Bank of Japan. So the Bank of Japan has been keeping their 10-year treasuries interest rate very, very low. They've been doing this by artificially going in and buying up all of these treasuries to keep the yield really low. But the flip side of that has meant that there's been a whole ton of capital outflows from Japan because, there are still people in Japan that, are saving. There's still people that are looking to retire, so on and so forth, right? And they're looking for yield, right? And essentially, because of these policies that the government's put in place, you're not going to get any yield by buying Bank of Japan, treasuries or whatever, or Japanese treasuries. And so as a result, there's a whole ton of investment that flowed into the United States from Japan as a result, right? So this Japanese monetary policy, right, of dealing with their treasury yields ended up resulting in a significant change to the balance of trade or balance of payments here. So what are the different ways so specifically, what are some of the ways that private investors in one country may invest in another country? Yeah, buy land, very good. Yep. So the first one is buying real estate.
We're not going to generalize that into real assets.
Well, the next one that we have is buying companies.
So,
I mean, you're right. Yeah, we can absolutely just talk about just buying any kind of real assets. So this could be commodities and something like that. Did you all hear about the J.P. Morgan scandal that happened with the bunch of bags of nickels that ended up being rocks, and they still can't figure out what's going on there? There's like this central mercantile exchange where, essentially like the metals just stay there, but the ownership of it changes. And at one point, and they still haven't figured out when, somebody switched out a giant bag of nickel for rocks, and it's like a sizable amount of money was stolen from this central mercantile exchange kind of place or whatever. So yeah, that definitely happens. In terms of buying real estate, the example that comes to my mind is Vancouver. Vancouver has been just hit by an influx of capital from mostly China, but just Asian countries and other countries looking for ways to find yield. So they go and they buy real estate in Vancouver. They buy these apartments or whatever, and then they never actually use them. And so there's all these like ghost apartments that are being used for speculative purposes, and it's making it more difficult, and it's making it more unaffordable to live in those houses, right? So there are some unintended consequences of international capital flows, right? In terms of it'll jack up the price of housing for the local residents. Similarly, buying companies, right? There could be some sort of rush as some country comes online to do something. There could be some sort of huge shift in capital in terms of just investing in companies and buying companies abroad. And then lastly, we talked already about just buying different assets from different countries. Could be current assets, could be some sort of future contract or something like that. So rare earth metals comes to mind here, right? And China's quest for securing rare earth. I mean, everybody's quest for securing rare earth mineral sources for all of our computers and everything like that. All of our electronics, consumer electronics. And our last one is our financial investments, like stocks and bonds. Stocks and bonds.
But we're separating out securities and buying companies?
Well, so buying a company doesn't necessarily need to be a publicly traded company. Could be a private company. And usually, when we talk about financial investments, we're talking about just buying a portion of the company, not necessarily taking over a portion of the company, not necessarily taking over the company.
So with buying companies, we're talking about total acquisition and the redirection of management of that company.
Right. The other thing I was thinking about was all the reverse merger and acquisitions that happen, especially in like the Toronto, the Canadian equity market. There's a lot of international acquisition that happens when companies want to go to a Western market, but they maybe can't get into the SEC or whatever. They can't get into the U.S. securities regulatory landscape. They'll go to the Canadian one, and they'll have a company there buy them or do some sort of like reverse acquisition. That's kind of what I was thinking there. But you have a good point that if you buy enough of a company stock, you essentially buy the company, right? Because if you own 51% of the stock, you have owning control of the company, which we just saw with Twitter, right? With that whole giant thing with Elon Musk buying the stocks and so on and so forth and taking it private.